Good evening, Dan Fitzpatrick here at stockmarketmentor.com, and I've spent most of the day today. I'll be spending more tonight and probably quite a bit tomorrow, updating and really revising my technical analysis for non-technicians course, which I'm going to be teaching on Saturday. Now, this is a brand new course. I've been teaching this methodology for over 10 years. It's the most popular curriculum I've ever taught, but I'm making it, quote, new and improved because, frankly, I've learned, I continue to learn. I'm the most avid student of the market that you know. I promise you, I work harder than you do at improving my trading skills. So I'm kind of giving it all to you in a real foundational way that I know that you will be able to utilize to improve your trading results. So I'm working on that today and tomorrow. You have to be a member to see this class, to get into this class, but you can just be a trial member, so it doesn't have to cost you anything. But anyway, I just want to let you know before I start here. So Floor & Decor. This is actually like the last of the Mohicans for us. We've been liquidating, actually for the last month or two, really, a lot of our growth stocks and taking a lot of profits in and out of a couple others that, you know, frankly, didn't work out that well because this is a real choppy market. But Floor & Decor has really held up well until the last couple of days. So I took that off of our list yesterday. We were stopped out a little bit below 50 bucks. But as I mentioned this the other day, be ready for a potential re-entry. The best traders can kind of get shaken out of stocks several times and they're really okay with it because what they're looking for is to be buying at really like the place of least resistance. And when I mean least resistance, what I'm talking about is there is resistance there, otherwise the stock would be going to the moon. But they're trying to get it just before or just as it starts to push through that level and then seek higher resistance. That's really like my definition of a breakout where, and this is what we were waiting for, a breakout through 50 bucks. It just kept getting tighter and tighter. And by the way, one thing, and I mentioned this too in my initial analysis, the further into the apex of the triangle a stock goes, a lot of times the weaker the breakout, or maybe it doesn't even break out at all, it just kind of trickles out the end like water out of a garden hose. So that didn't happen here, but what we did get was we got an entry right. We actually got it a little bit below 50 just before it broke out, and then it ran up, but then it didn't go very far, and it's come back down. I was kind of hoping that it would hold at 50. It didn't do that. So it finally came down, took us out of the trade. But now if you really look at it, it's back at a pretty good entry point. A couple things. First of all, if you are buying here, and I said if you're buying here, you need to keep a stop just a little bit below the 50-day moving average, because that would be my thesis for why the stock is bouncing right here. Let me zoom in here. See, so the stock fell down 2 big days in a row on heavier than average volume, closed at or near the low of the day each time. And then today it fell down to the 50-day moving average. 46.27 is the 50 and 46.19 was the low. So it really rebounded right off the 50-day moving average and formed this little hammer pattern where the high and the low, the open and the close are up near the upper part of the range, and then this wick down between here, the open, and where it traded to the 50-day moving average. That's the handle. And the idea is it's hammering out a base. And so this is kind of a classic reversal signal. I'm hesitating a little bit because this is why. If this was a much longer tail and say came down to 45 and trading volume was really, really heavy, then I'd be absolutely banging the table on this saying you got to buy, buy, buy. But as I look at this now, I'm seeing it as a low risk entry for someone who wants to start a position here. It's low risk because, again, you can put your stop just a little bit below the 50-day moving average, because that would be the only reason why you're buying here, because you think the 50-day moving average is going to hold up. But the thing is, with all of this supply, with all from, look, every time a share is sold, somebody bought it. So this thing really fell hard the last couple days. And that means there's a lot of unhappy bulls, folks that bought the shares, thought they were going to go up, and they didn't. And now they're happy to sell into any kind of strength. And so what I'm saying is that if the stock starts to rally here, you're probably still going to see some selling pressure. And, or to put it another way, there's a low risk in buying here, but the reward, if you buy right now, the reward is a little questionable because of all the supply here. So I think that if you want to start a position here, you certainly can. Another way to go would be to just watch this stock, because I got a feeling that as long as the market holds up okay, I think you'll probably see a little more a little more rebounding here right off the 50-day moving average. And next week might be the time to really start taking a position in the stock. So that's really it. Look, the uptrend is intact here. You look at the 50 is moving higher, the 150 is moving higher, the 200-day moving average is moving higher, prices above all of them. So this is still really in a good bullish configuration. You just have to account for this distribution over the last few days. So ultimately, I think Floor & Decor goes higher. Just make sure you're getting in as close to the 50 as you can. All right, that's it. And everybody, look, again, I'll see you on Saturday for technical analysis for non-technicians, or as I'm starting to call it, from chaos to patterns. And that's a good journey for you to take.